This, of course, has a lot to do with energy security, with prices of oil surging here. Now, let's go back to that whole issue. What are investors pricing in terms of the level of oil, the prices of oil? Just to take a quick check, it's already closing in on 120. There's another round of price hikes. Hindi pa ba tapos for this inflationary pressure?
Well, that's a problem because if you take a look at what happened last week, oil prices, coal prices surged last week because there was this phased ban implemented by the European leaders on Russian oil. So Russia exports a lot of oil. If you take a look at a global perspective, and that's what's driving oil prices right now, especially for the Philippines, we're feeling the brunt since we're a net oil importer. Hence the significant oil price hike tomorrow. And it's too early to say we're out of the woods. Definitely, we're not out of the woods yet. So there's possible more pain ahead.
Okay, so this can still go higher despite the fact that the ban was already in place. I mean, it was announced basically last week. Still some risks on the table. What about the other offshore issues here apart from the Russia-Ukraine war? There is, of course, the U.S. Fed hiking, but also related to that, strong jobs report that they released, quite a strong economy, and then China also sort of easing their COVID protocols. As you mentioned already, there's quite some robust demand for oil there. Tell us, is that in any way tempering the global outlook of growth?
I think in terms of growth, what's more affecting it's more on the cost side of the household. Definitely the demand is there, but the demand can be tempered mainly because of higher costs. For example, here in the Philippines, we're seeing significant reopening already, right? But when you try to travel, you try to temper your costs if you're driving a car, right? Because oil prices are significantly surging, and that's what we are seeing also globally, especially the transportation costs. And there's also supply chain disruption. If you take a look at what's happening in China, they just eased curbs last June 1. But prior to that, there was significant problems in terms of supply chain. So that's also affecting costs globally. So that's the situation right now. Of course, if you take a look at data-wise for U.S. inflation set to come out this week, the data is set to come out like lower than the previous month, but it's still high at 8.2%. So there may be signs of peak, but definitely costs are still high.
Okay, Royce, can you nuance this for us? Because I know that you're very linked to the consumer stocks in particular. What has consumption been like ba talaga? I mean, has this been dented? Has it been better than expected with the reopening of the economy? And is this reflected in the index? Can we say that the index level is showing the consumer confidence levels, at least for the year?
Well, for the consumers, the top line has improved. The problem is the bottom line. Margins has significantly lower, and even the guidance is not that optimistic, right? So if you take a look at what has been reflected in the market, there's still some upside. But as for us, for example, our initial year-end forecast was around 8.7. Right now, we lowered it to 7.2. That's a significant downgrade. But that's reflecting on the tempered outlook by consumer companies and other sectors as well. So for the market, there's still some upside. Definitely 0% exposure is not recommended, but you don't need to be aggressive at this kind of market. That's our takeaway there.